Hello friends, the topic for today's discussion is the various intermediaries which are involved in capital market. You all know that capital market is a place where if we need money for long term and you don't want to get burdened with the element of repaying it back within a timeline is like you need to go to capital market. Capital market is where we deal with equities, we deal with preference shares, we deal with bonds, debentures. Some instrument may have a fixed redemption date, but some instruments may not have. Like in case of equity, once a company is able to raise money from market and the investor who is actually a shareholder would like to take an exit, they need not to ask it to company. They can simply sell their stake to someone else in secondary market. Okay, so Bombay Stock Exchange, National Stock Exchange, these are your two stock exchange where most of the companies are listed, and you see if you want to take an exit from any investment, you can sell your stocks in any of these two stock exchange. Now, specifically going into this topic, which is like various key intermediaries which are involved in capital market, you see we need to understand their role. Intermediaries are the facilitators. They facilitate in a particular specialized manner. I mean, you see, there when you do go to market and you're trying to buy something, you see, it is not possible without these intermediaries. You need to have someone who is going to take you to that particular place. There is someone who is going to give you an exchange, like possibility. It may be through currency or something, but you see, something uh, is required for facilitation. So here, these intermediaries helps you to complete your transactions, which is either a buy or a sell order, and it helps actually it helps in bringing in efficiency, improves liquidity in your market, and also brings in transparency. So these are the important things for various capital market intermediaries. Let's now look on to some of them. Okay, let's start. You see, intermediaries play a very crucial role. Without their existence, it is next to impossible to have a smooth, functional market. You see, investors, people who are willing to invest, and borrowers who are going to raise this money from market, they need a platform. Capital market is actually that platform. So we cannot operate without these specialized intermediaries. Now, let's start with it. The first intermediary that we are going to have in our discussion is investment banks. Now, you see, investment banks are specialized bodies who are expert in helping companies to raise money. They are into underwriting. Underwriting in the sense like if something goes wrong in market for a particular issue, they'll help you to cover up that gap and will subscribe for the shares if anything is pending. Then you see they people actually helps you in advisory. They give you advice in context of merger acquisition. Let's say you would like to value a company, valuation of a company will be done by investment bankers, so they play a crucial role. Now you see investment banking started from America. So if you would like to see who are the major players, you'll find Goldman Sachs, Morgan Stanley, Barclays. They are the major players. They do have their branches all across the globe. So investment bank is a very, very wide where you see now you see these bodies are very specialized in nature. Means they do have their connections all across the globe. So let's say I am sitting in India and I would like to acquire another company which is there based in South Africa. See, I may not have my connections in South Africa. So what I can do is like simply I can rely on an investment banker, any of these, and I can give them this task to them. They can act as an agent for me, and you see, and will help me in the facilitation part. Facilitation means this particular acquisition or merger part. They'll help me identifying a target company which can be acquired. Second, they will help me in valuations. Valuations means the actual net asset and liability position of the company. They'll help me in understanding the fair price of this company. So I am not in a pressure to pay something which is very more as compared to the actual valuations of the company. So you see, they help me by guiding me on a wiser decision. Okay, they will give me inputs for my like whatever business actions I'm going to do. So they are going to be my advisory. Now, next is like in this line, we are going to see. is broking firms or stockbrokers. So if you see, there are some examples given at the top: Jirodha, Upstock, Angel Broking, uh, Sher Khan, HDFC Securities, Motilal Oswal, IIFL, Access Direct. So they all are into broking firm business. Now you see who are they? They are a facilitator. They help the beneficiary. Beneficiary is a person who is either buying a stock or selling a stock. So when you need to do something, a trade, maybe a buy trade or a sell trade, you need a facilitator. Most of the time, you need a facilitator, a platform through which you can actually connect to these capital markets, to these stock exchanges. Okay, so they help you both ways. Like they'll give you a terminal to do your transaction yourself, or if you want them to do it for you on your behalf, so they'll also like facilitate your transactions through their operators. They give you investment advice. They regularly keep sending tips regarding various trends which are expected, and as an investor you may use those tips for taking your call. Next is stock exchange. Now you see in India, mainly earlier there were so many regional stock exchanges were there. Regional means according to region. Now if let's say I'm presently located at Fagwada, a place in Punjab, so in Punjab, Ludhiana Stock Exchange was one of such regional stock exchange, which was there earlier. Now you see we have kept only nationalized stock exchange to national level stock exchange. One is Bombay Stock Exchange, and second is you have National Stock Exchange, BSE and NSE. Okay, so you see, stock exchange actually gives you a marketplace where you can meet your counterparty. If you want to buy something, then you'll get sellers in this market. If you are trying to sell something, then you'll find buyers. So they ensure transparency, liquidity, and smooth flow of funds. Means you want to buy something, you have to pay money, you'll get the stocks into your account. So facilitation part is done by stock exchange. If you don't have an exchange, exchange is like a market. Okay, if you don't have a market, and you see from where to buy things. Clearinghouse. Next is clearinghouse. Clearinghouse is actually responsible for clearing and settlement. Let's say you placed a buy order. I'm trying to sell something. We don't know each other, but it is clearinghouse who will make sure that this settlement, this transaction is complete. And you see, this transaction has certain specific things: number of units which are sold or bought, and the price at which it is sold or bought. You see, there are lakhs and lakhs of bids at same point of time. So it is a very tough call to do this clearing and settlement. That you see, we have clearinghouse whose role is to make sure that both the parties involved in the trade will get their due, like whatever is due for them. Like if I'm selling it, so I need to get money. If I'm buying it, then I have to get the shares. So both parties, like considerations will be kept in mind, and settlements will be done. Depository. Now you see, next part is depository. Depository, I'll give you the two names. At the top you can see NSDL, CDSL. They are the two existing depositories that we have in India. What is the role of a depository? Is to ensure whatever stocks are there bought and sold by people, many people, they're keeping the record of it. Okay, they're keeping the record of ownership. Let's say, I tell you, let's say there is a I have some stocks in my account. I would like to sell it to B. Mr. B is selling it to Mr. C. In one single day, I'm saying C is selling it to D, D is selling it to E. Likewise, lakhs and lakhs of, means you see, infinite number of transactions are possible. It can be bought now and can be sold next month. Buying and selling is ongoing activity. Now you see, when we are doing it, someone has to keep a record of it. So without this record keeping, it is next to impossible, because then it is very difficult to track who was the owner on a particular date. Let's say I give you one situation. Company is announcing dividend for someone who is holding a stock on a particular date. And in that single date, the ownership has been transferred from, let's say, A to B, B to C, C to D, D to E. Everyone was holding this stock on the same day. But who should get this dividend is like again a matter of question. So hence you see, we need institutions like depositories who are going to help us in record keeping, and they will define it. Who is the person who needs to be given this? Who is the rightful owner of this particular share on that particular day when dividend was declared? So according to their demarcation, this dividend part is actually given. Now, let's go forward. The next agencies which are coming in, or the next set of facilitators who are coming in, first is mutual funds and asset management companies. You see, Mutual fund is an instrument in which you park your funds. Mutual fund helps you to like invest in big stocks which directly may not be possible for you. Like MRF, one stock is approximately 1 lakh rupee. So if you want to go into MRF with a total investment in your pocket available is for 25,000, so it is next to impossible because you cannot get shares in fraction. But if you want to take this exposure through mutual funds, it is all possible and it is all viable. Okay, so asset management companies are those companies who manage these mutual funds. On right side, you can see one exhibit in which top asset management companies of India they are showcased. Let's go to 2 3. SBI Mutual Fund at number one because they are holding up the maximum share. Then ICICI Prudential and followed by HDFC Mutual Fund. And likewise, this list is carried over. Now you see, this is a long list. They all are market players. Now they all are coming under this category of facilitators. Okay. Next is hedge fund. Now you see, hedge fund is again type of investment option where risky investors are coming in. Again, I tell you one more thing. Everyone cannot go into hedge fund. Hedge fund is something which is hedge is to defend. Hedge is like a shield which helps you to protect your investment. A hedge fund is an investment in which minimum investment restrictions are there. Like anyone and everyone cannot go into it. Let's say you're keeping a check of approximately 1 million rupee. So you see, investors who are capable of investing 1 million and multiple of it, they are allowed one. Second, you see, hedge fund will give you very good return. Hence, they tend to go very aggressive sometimes. So risk taking capacity should be there. So if you don't have risk taking capacity, hedge fund is not recommended to you. Their return rates are very high. Okay, they use the funds which were generated through collection of or pooling of resources into like way variety of instruments, not only in same country but also overseas locations too. Wherever there is an opportunity of earning, they'll make it. They'll invest that money into it. Now you see, carrying it forward. Now the next set of intermediaries who are coming in is like pension fund, who is again, you see, pension fund, they're collecting pension from staff members and then they're pulling it up together. So they are coming as an investor. Pension fund houses, they're coming. They're big investor, big ticketing investors. On behalf of their employees, they're making their investments in capital market and they're diversifying their portfolios by putting in money not in one but in many securities side by side. So they have long term goal because you see, retirement and post retirement expenses are to be taken care by pension money. So investment horizon is very long. So this is one major investor in your market. Next major investor is coming in is like insurance companies. The insurance companies, what they do is like they collect premium from people. They give coverage policies to customers, and you see, the money which they have kept in pocket is kept idle. So if you keep something idle, is not going to help you much. So you have to invest this public fund into some sort of investment options. So they are again going into capital market because when you invest your money, you will get some return on your investments. So do not keep your money idle. Same is the case. Now next is like next agency is very important. This is credit rating agency. Now credit rating agency, on right side you can see Crystal, ICRA, Care, India Rating. So they have given you a couple of rating agencies on the right side. What is the role of rating agencies? To establish credit worthiness of an issuer. Now you see, people at large who are actually acting as an investor, if they need to invest their money in any particular company, they don't know much about this company. If you try to read the prospectus or the books or the balance sheet, may be possible that you're not from the accounting domain, so it is tough for you to go through all these. So it is better you go to some advisor who helps you understanding the profile of a company. So credit rating agencies actually give rating to different issues, making it clear and easy for a common person to invest. So their rating provide investor information about the risk associated with the security and it helps them to take their call. So let's say, I'll give you one example. Any movie coming in, you check for IMBD ratings, MD ratings. So these ratings gives you an idea whether this particular movie is good or not. Accordingly, you invest your weekend into these movies. Similarly, when you're going to stock market, you are interested in investing your money in an IPO, initial public offer, whether this IPO is worth or not. Just simply go with the credit rating of the particular instrument if it is available, and you see if it is available. See what is the rating given. If rating is high, it indicates that stock has a promising future. Next couple of entries into this segment of market facilitators or intermediaries is market maker and custodian. Who is a market maker actually? You see, you need to understand market is a place where buyers and sellers coming up together. Market maker means, you see, sometimes you will see an abnormality in your market. Yani you have only buyers available in your market, means everyone is willing to buy this product, but there is no seller. And similarly, there may be another negative situation where it is only seller, and seller, but no buyer. Okay, so stock hitting upper circuit or lower circuit is the other way I am defining it. So you see, when this thing is going to happen, and you have only buyers or you have only sellers, market is not going to happen. So we need to have someone called as market maker. Their role is to make sure they bring in liquidity into market, they bring in volumes into market. So if everyone is selling, their role is to buy it, even though market price movement of your stock is not indicating a rational for buying it, but you see their role is to go against the market tide. If everyone is selling it, they'll buy it, and if everyone is buying it, they will sell it from their pocket. Okay, so market makers bring some sort of stability, and then from some abnormalities for a periodic interval. A custodian is someone who is into, like you see, who is a custodian. Custodian is the person who is giving the role of safekeeping of security. Okay, here custodian is a entity who helps you to hold your stock. They keep your stocks in their account. They are facilitating it not only to small investors but also to big institutional investors. You see, institutional investors are giving promises to small investors. Uh, this is big institution who is making investment into market. Now, from where this big institution is coming in, if you look into their source of funding, you'll find they are again funded by very large number of small investors. You see, in such a case, you cannot give these instruments directly into the account of your clients, and you cannot give it to the beneficiary. So you have to hold it somewhere. So where are you going to? Let's say I give you a simple synonym to this. Let's say custodian is a person who is a locker in charge. Yani when you go to a Gurudwara or any religious place, you must have seen shoe counter where you can deposit your shoes, and after coming back you can take it back. A custodian is same sort of thing. So where you park your securities for some point of time, where you see the moment you are selling it, it will go out from your pocket. But if you're buying something, so where are you going to hold it up? It is with the custodian you have to keep. And you see, custodian can be asked to submit account statement on periodic intervals so as to map it. Okay, so they give you surety that company is not going to uh, do some unfair treatment. They are not going to play on your funds. So custodian will make sure that they are holding the stocks, and that stocks cannot be misused by anyone. You see, next is regulatory authorities, which is very, very important. Uh, if you see the top line, Reserve Bank of India, Securities and Exchange Board of India, especially for capital market, IRDA for insurance, for Forward Market Commission of India is for, like you see, derivative section, and then you have PFRDA, Pension Funds Regulatory and Development Authority. So for regulating pension sector. Now you see, they all the are the regulators. Their role is very important. If they are not there in market, you see they are actually acting as a referee. First you need to set rules, and then you need to ensure it that these rules are being followed. So in case of America, you will find SEC, Securities and Exchange Commission, whereas in case of India it is SEBI, Securities and Exchange Board of India. So you see, these intermediaries helps a lot in smooth functioning of capital market, and they actually ensures that country is getting its like due share of growth and development by enabling flow of funds from investor to interested companies who would like to borrow it from them. Thank you. Have a